Anthony.
Hi, Jeb. How are you?
Can you? Thanks.
All right, thanks. How's the prep going for tomorrow?
It's awesome, mate. I've got quite a lot done today. I'm definitely going to do the long questions first. I just did a couple of timings today, and we'll see how accurate I've been. But I did a couple of timings and stuff on the long questions, and just the amount of marks that I'm going to get done in the amount of time. So I'm definitely going to do them first. I mean, okay. I did the one exam. I think it took me 50 minutes to do all 50. I think it was I'll tell you which one now, and we'll go through it. It was October, November 14. Okay. It took me about 40 minutes to do the multiple choice, or 50 minutes to do the multiple choice, and it took me about the same amount of time to do the long questions, and it was worth 50 marks.
Yeah, so long questions are definitely more important.
Yeah, so I just find that, and then it's going to give me a bit more time to actually focus. Yeah. Because I find with the multiple choice, there's quite a lot of working to do for one mark.
Yes.
On some of them, where's that you're basically doing the stuff, and it leads into the next one and the next one. So, I find that it's definitely going to be a good technique for me to start with that, get that out the way, and then I can focus on, and see what time I've got left, and then just go back and just do some check-in and stuff when I'm done. So
yeah, I think it's a good idea for a subject like this, where section B counts 50 marks. I think it is better to start with the long questions, because at least then you're building a solution, and also you're hopefully getting marks for workings and things like that.
Yeah, and also it's just I know especially if I get something that I'm like, if I get the operating cash flows or incremental cash flows and that type of stuff, like I can be quite good at that. So it'll be quite easy for me.
Okay. Great.
Yeah, and I get quite a lot of marks there, and then then I'm not worrying about whether I'm passing or not. Then I can actually just spend time and just try and accumulate as many marks as possible.
Yes.
Cool. Okay, so question one so we're looking at the long questions because we did the multiple choice yesterday for the 2015 stuff.
100%.
Okay, so Anthony, like if we look at the question, remember we did the one yesterday where this has got that same thing, where it's got that operating cash flow and the interest stuff, okay?
Yes, yeah, so I see that as well.
Yeah, so I went and I did that, but your answers to this were very different to the ones for the previous exam.
Okay, well, let's update it. So I'm looking at the workings as we go. So obviously we've got a bottling company here. They're manufacturing glass bottles. They want the initial investment. Okay, so it's 4 marks. You had to obviously write out the format, the template. So installed cost of the new minus the after-tax purchase of the old, and then take working capital into consideration.
Yeah, 100%.
Okay, so what did you get for the installed cost?
142.
142, good. Okay, so here there were, installation, yes.
Cost for the molds. There was the molds. There were molds, so it was additional stuff,
Yeah, so you have to include those two to get the installed cost, the new. Okay, then we've got to look at after-tax purchase from the old. Okay, so this is where you've got to work out the carrying value.
Yeah, okay. The consultant project. No, okay, but there was no old machine in this one.
Let's have a look. Okay, you have to buy a machine.
Yeah, so there were no old machines.
Yeah, so this is expansion, not replacement. So then everything for the old would be 0.
Yeah, so
you wouldn't have to worry about it.
Yeah. Then so the part where the concern comes in is obviously that's exactly the same. That's exactly the same as we did in the question yesterday.
Yeah.
But I see your answers are quite different for what you've got in your.
I didn't include that because of the interest being outside as a sunk cost. But
no.
I agree with you with the net working capital though.
In this one, you included the interest. You included the interest in the thing, but we'll look at that now. So
interest on the overdraft. Let's just see here.
Yeah, you did.
Interest on the overdraft. Oh, okay. I see what you mean. Okay, in terms of the OCF, So the interest here, in terms of the bottling, the 1,200 and the 1,000 would be a change.
So it would be
plus 1,2, and this would be a negative plus 1,000.
1,000, yeah. So okay, I mean, I've got it. It's exactly the same. So your change in net working capital is 200 rand.
Plus 200, yes. Okay, so then we would have 1,422,200. Yes. Okay, so let me update that.
Cool. Yeah. Cool. Because we just discussed that yesterday, and then.
No, I agree with what we discussed yesterday. So I'm just updating and mixing. Yes.
Okay, 100%. Then obviously, so I've just put question marks in this. So for the second part of the question,
okay, you've got cash flow for year 1 and 2.
Yeah. Okay, so year 1, I've got year 1. You've got the cash. Your revenue is 80,000.
Yeah, the sales.
Yeah. Okay.
And 72.
No, the proceeds for the first year is 80,000. The second year is less 10%.
Correct. 72.
Yeah. So it's 72 in the second year.
Correct. Good. What else do you have?
So then, obviously, there's a variable cost of 15%.
Yes.
Okay.
So how much is that?
The fixed. So in the first year, it's 12,000.
Good.
And 10,800 in the second year.
Good.
Yeah.
Okay. Fixed costs.
Your fixed cost is 4,545.
Okay. Good. Yeah. And then the production costs here. Where was this? Bottling Limited will need plastic material worth 1,200 in order to commence with the production. Okay, so I see I've included it here as part of the year 1 costs. But if I read the question again, it says it was for the commencement of the production. So that'll be part of the initial investment. So yeah, that can go.
That's exactly. So we've already so that's why I haven't even looked at that, because it's part of the. And I think that's why the interest amount would also, I agree with you, that the interest amount would be a sunk cost, because it's part of the whole initial investment.
Yeah, so as long as it's, so in terms of timing, just be careful. Obviously, when I did this one previously, this was October, November 2015, I had included it as part of the year 1. But if I read the question again, commence means to start. So yeah, we would put that in the initial investment as in terms of working capital. Yeah, not as cash flow for year 1. Okay. Right. Then they say the company will finance some of the plastic material using overdraft facilities. So obviously that's the financing of the plastic, and then the interest on overdraft is something unrelated. Yeah, so that will definitely be a sunk cost. That can go.
Okay, cool. So then what we'll do, so then we get to the EBDRT.
Yes.
EBDRT, 63,500 and 56,700 for year.
Okay, so you've included a subtotal. That's fine. I hadn't here, but that's okay. You should get the same amount after depreciation. What is your depreciation?
Yeah, so I've got a minus 7,500 and minus 14,300.
For depreciation?
Well, after the depreciation. So the depreciation is 71,000.
Yes.
Yeah. So so your EBRT is minus 7,500.
Yeah, that's fine. And minus 14,300.
Yeah.
Okay, so everything's perfect up until there.
I just do every single step exactly like that. I do, if it's appreciation, I put the EBDRT because it just makes it easier. I just like to do it step by step to make sure, because then
that's actually better.
It's also easier to pick up mistakes. It's also easier to pick up and rectify mistakes if you can check where you. Okay, then obviously your interest is 0 because it doesn't mention anything there about capital.
Yes.
And what I would put here is obviously just something around. I just put a little note at the bottom. Assume that interest is 0 because there was no mention of debt, and assume that capital was used because there was no mention of debt.
Yeah.
So therefore,
just remember with the written answer that you're going to create, obviously as part of your OCF, because you haven't included this overdraft. If you leave it blank or leave it out, the examiner won't know if you've left it out on purpose or you've left it out as a mistake. So the thing is, when you read that, I would make a note here as well. So even though we haven't included it, like here, but I would mention that it's sunk. I would discuss it just in terms of theory, so that at least you support why you're not putting it in.
Yeah, so I'm going to mention 2 things about the interest. I'll first say that interest is assumed to be 0 because the assumption is that because there is no mention of debt, so I'll put there that it's assumed to be that the capital is assumed to be all equity, as there's no mention of debt split.
Yeah, that's fine. You can say that.
So I'll mention that, and then I'll mention something about the interest on the overdraft is based on the initial investment and is deemed a sunk cost.
Yes, that's good. Because remember, that could carry a mark actually. We won't know, but it's always better to include something that supports the answer that you've created.
Cool, 100%. Okay, so then obviously interest is 0, so we get to the EBT, which is 7, which is the same as the one above. Your tax at 29% is 0% tax.
Yeah, it would be 0 because it's actually an assessed loss.
Yeah. So the only time you subtract tax is if it's on the sale of an asset if it's on the sale of an asset and the book value is higher than the amount that you sold it for. So there was a scrapping allowance, basically.
Yeah, well, that would be a benefit, but that would only be taken into consideration for the initial investment.
Yeah,
if you had
100%.
to work out the after-tax proceeds of the old.
Yeah, that's why I'm saying it doesn't go. That's why I'm saying I've got zero tax here.
Yeah, you don't include that here because it's an assessed loss. So an assessed loss would only be carried forward to the next year.
Yeah, no, 100%.
Okay, and you could actually even mention that as well, because we're discussing it. It's a good idea to put it in.
Yeah. Okay.
Okay, so obviously we're talking about the tax consequence here. So now, if I've put a 0 here, we're just supporting the answer. We're saying, well, we haven't calculated 29% on this because that was a loss that will be passed on from one year to another. Yeah. Okay, when they start making profit, we would then take off the assessed loss benefit that we would receive previously.
Okay, so then obviously we add back the depreciation on both the 71,000, so 63,500 and 56,700.
Yes, that's adding back, and then you get the OCF, correct?
So, I mean, actually, when you get your EBIT, it's basically what your operating cash flow is, because there's no tax and there's no interest in this.
Well, there would be interest if there was interest, but the depreciation wouldn't affect it.
In this particular case, there is no interest.
Well, in this case, yes.
Yeah. Okay, and then obviously the last one is expected terminal cash flow. So obviously you after tax sales proceeds from new assets, the sale of the new asset less the tax, and then after sales proceeds of the sale of the old asset add less. Okay, so what I'd have there, the sale of the asset of the current asset is 32,660.
Okay, that was the proceeds, right?
Yeah, that's the proceeds.
Good.
Then you need to take the tax off that, so it gives you 23,188.60.
Gives you 23,188.60. Yes, okay, that's right. So your first part is correct.
Yeah, then
with that.
There's no proceeds from the sale of the old asset because there is no old asset. It's an expansion, not a replacement.
Exactly.
Okay, so there's nothing. So your terminal cash flow is basically the 23,188.60.
Yes.
Okay, and that's as far as I could go because the rest of the exam was in Afrikaans.
Okay, yeah. So I looked at this. This is actually what UNISA posted. I mean, if you look at my heading here, this is FIN3701 2005. 10, and then they say E, and then this is 1. So obviously when the students had downloaded this previously, this was the paper they had posted. So unless they've posted a different paper with the English, which they probably haven't, I did send you the translations as well. So a student actually translated this for us a while back, and this is what they gave me in terms of the translations.
Awesome. I'll work through that. And then we can discuss it a bit later.
Yeah, that's fine. So just use this to get through those questions.
Yeah, cool. Because I actually checked. So they've got 2 of each of the 2016 exams up there now, and none of the 2015 exams.
Oh, okay.
Yeah, and still no 20.
They're very old, so they don't post such old exams.
Yeah.
Yeah, but it's always good to go through more papers. So we've got them. We can obviously discuss them.
Yeah. Okay, then I went to October, November 14.
Okay, maybe just one other question about the posting of papers. Has the 2017 October, November been posted?
No, it hasn't.
Still not? Okay.
I paid for it this morning, actually.
Okay. That's a
and they haven't responded to the mail I sent them either, so...
Okay. All right, so that's interesting. So maybe the 2017 October, November one will probably be similar to this.
No, but they've posted the Afrikaans one. So they've posted the Afrikaans one. It's just, that's...
Interesting. Okay, so the Afrikaans 2017 one is
on there.
English.
Yeah, just not the English version.
Okay, maybe you should send that to me and then we can just look at it. I mean, my Afrikaans is not that bad, but I mean, it'll be difficult to go through it obviously in detail, but maybe just to look at it and just discuss the general scope. Like maybe we can just say, okay, this question's looking at capital budgeting, or this one's looking at leasing, or this one's looking at that or that. So I think maybe we can just use the Afrikaans version just as a guide in terms of sections. We might not be able to go through the actual workings because it's obviously in a different language, but at least that can give you an idea of what they were tested on last semester.
Cool, 100%. I've actually downloaded it. I'm going to send it to you now.